Hello and welcome to Market Watch for the end of the week that actually started on the 30th of October, despite the fact that we're now in November. Two things I want to cover. One of them is actually overseas, and then one will also bring back here to Australia. The thing we've been talking about for quite a while is this whole sort of global inflation story that is, and Europe is the one I really want to highlight here, was that again, Europe isn't reaching its mandate around inflation, along with the US. Although they didn't have their own CPI data, there was their consumption numbers that came out that showed clearly, even in the US, which is probably the most and the bright spot in the world around what's going on in global growth, it too just isn't seeing inflation. And that feeds into this whole idea that at the moment, if you look to a market's perspective, in a low inflation environment, growth is the one part of the world that will outperform. And that's why you need to highlight things like the NASDAQ, have a look at emerging markets, particularly in Asia. Hang Seng is a clear example. They're the ones that have really outperformed in calendar year 2017. And if I'm honest, looking about what's happening into 2018, likely to be so still, because inflation just isn't materializing. So that was what I took out of this week, was that whole story that we've been discussing pretty much through October and now starting into November, is that inflation still isn't there, despite the fact that we are going through a better growth period, despite the fact that actually wages aren't moving, but jobs are. That isn't just an Australian situation, that is a global thing as well. So something to be on your radar, clearly watch it. As I said, that growth metric is the one area that has performed this year and likely to next year. Coming back home, the only other thing I really want to highlight this week that came out was there was some reasonable data from the home side, and we did see the home price index come out on Wednesday. Interesting thing about it's the first time since May 2016 that we actually saw two consecutive rolling quarters in Sydney contracting, down 0.6 of 1%. Month on month, it was down 0.5. Melbourne's the case in point. It's the only still market that's really moving at quite a reasonable rate, expanded at 0.7. However, it was the slowest quarter it's been since June 2016, and it too starting to slow down. So the record amount of sort of immigration coming into this part of the world is why the house prices are up there. But in the main, if you have a look across the whole board, Perth contracted, Adelaide, Brisbane was stagnant, Darwin's the outlier, contracted 4.4%. That in the main, the macroprudential rules are coming and starting to bite, the changes around interest only and principal loans are starting to bite, and we are starting to see a decline in the housing market. And you would expect that to move into 2018 as well. And that all gets back down to the point that at the moment also, not are we not seeing wage growth movement not happening, if you start to see the wealth effect starting to be encroached, and that's housing. The housing-led recovery has been an amazing mover for our market and also for our economy. If that starts to come in, again, all filters back into the RBA, and next week we do get their statement of monetary policy, and that will be a real part of it, is whether or not they're also starting to acknowledge that the housing market, which has been a big part of inflation, it's been a part of the wealth creation, if that's being affected into FY18, that will be a big change, and it will seriously put a dovish mood, not in the Aussie market, in an Aussie dollar, but across the entire economy.